9 SUVs just got quietly slashed under $20,000. Dealers don't want this getting out. We're ranking 9 SUVs now sliding under the 20K mark in 2026, with real model names, real trims, real regions, and the actual financial reasons behind each drop. And the number 3 pick, a brand nobody expected to fall this low, will completely change how you shop for your next car. This list isn't hype, it's what's actually happening on dealership floors right now. Model by model, region by region, brand by brand, verified across multiple markets. Stick around, because the deal at number 3 will make you question every single SUV you've almost bought this year and possibly every SUV you buy from here forward. Starting with the SUV everyone ignored until now. At number 9, it's the 2026 Nissan Kicks. This compact crossover has been sitting on lots longer than dealers ever expected, and it's not because the car is bad. Reliability ratings remain solid, fuel economy sits above 30 miles per gallon combined, and the interior tech punches well above its price class, with a touchscreen and driver assist suite that used to be reserved for pricier trims just a few years ago. What most people don't realize is that production numbers were miscalculated back in 2025, when Nissan overestimated demand in the subcompact SUV segment across North America. That segment has been shrinking steadily as buyers shift towards slightly larger crossovers with more cargo room, better highway comfort, and more back seat space for growing families. Now there's a surplus nobody planned for, sitting on lots from California to Ontario, aging past their optimal turnover window, quietly costing dealers money in floor plan interest every single month. Here's the twist. The discount isn't coming from Nissan's corporate office directly. It's coming from dealer-level markdowns, with individual dealerships competing against each other in oversaturated markets, especially across the American Midwest and Southern Ontario, where Kicks inventory has piled up the fastest according to regional sales data. That regional pressure is exactly why prices are dropping faster in certain zip codes than others, sometimes by over $2,000 between dealerships less than 50 miles apart on the exact same trim level, same color, same options package. If you thought that was surprising, wait until you see number 8, because this one involves a brand that almost never discounts anything, on any continent, under any circumstances. This next one broke its own pricing pattern completely. At number 8 sits the 2025 Volkswagen Tiguan, still available on lots as the outgoing generation trim before the redesign fully takes over showrooms later this year. For over a decade, this nameplate barely budged on price, even during the 2020 downturn and the chip shortage years that followed, when most SUVs saw wild price swings in both directions depending on supply. Buyers who wanted a Tiguan simply paid the asking price because Volkswagen rarely blinked, and dealer markups on this model were practically guaranteed year after year. But this completely changes everything. Emissions regulation shifts happening across the UK and EU pushed Volkswagen to offload older platform versions before compliance costs increased under newer testing standards set to take effect within the next reporting cycle. That means Tiguan trims still fully capable, still under full factory warranty, are being priced to move immediately rather than lingering into a new compliance cycle that would cost the manufacturer significantly more to certify and homologate. Dealers in Australia and Canada are following that same pattern, matching regional markdowns to stay competitive against domestic and Korean manufacturers who've been undercutting Volkswagen pricing for years in those exact markets, eating into what used to be guaranteed Tiguan sales. What most buyers miss is that this isn't a cheap car story, it's a temporary window story with a real expiration date attached to it. Once compliance-driven stock actually clears from Volkswagen's global inventory pipeline, Tiguan pricing snaps right back to normal within a few months, sometimes faster than analysts expect based on past clearance cycles. That urgency is exactly why savvy buyers are moving fast on this one instead of waiting around for a better deal that may genuinely never come again this generation. But here's what nobody's talking about. The number 7 spot involves a shift in resale psychology that's quietly rewriting how an entire generation views affordable SUVs. Buyers are now avoiding a segment they used to obsess over completely. The number 7 pick is the 2026 Chevrolet Equinox, a midsize SUV that used to command premium pricing purely on brand loyalty, passed down through generations of American buyers, often bought without a second thought, simply because it was always a Chevy family. But that loyalty is fading fast among younger buyers, and Chevrolet dealers are noticing the shift in real time through their own internal sales data, customer surveys, and lease return trends that paint a clear picture. What most people don't realize is that a shrinking loyal buyer pool means dealers can't rely on emotional attachment to move Equinox inventory anymore. They need actual, measurable price incentives to close deals that used to close themselves on nameplate recognition alone. No negotiation required. This shift became obvious once internal social sentiment data showed declining interest among first-time SUV buyers, especially those under 35, who increasingly favor Korean and Japanese nameplates for perceived value, tech features, and better long-term reliability scores according to independent surveys. GM responded by expanding rebate programs, specifically targeting that younger demographic, and those incentives quietly trickled down into broader public discounts across the entire Equinox lineup, not just entry trims aimed at first-time buyers, but mid-range trims too. It's not charity, it's strategy. They're trying to rebuild brand loyalty before losing an entire generation of buyers to competitors permanently, possibly for life, which is a much bigger long-term problem than a single quarter's sales numbers. And this is where it gets crazy. Some of these Equinox discounts are stacking with regional cashback offers and unusually low APR financing deals, pushing effective prices even lower than what's advertised on the window sticker at the dealership, sometimes another $1,000 below sticker. Which brings us to number 6, where a completely different kind of pressure is driving the markdown, and it has nothing to do with buyer demand at all. This drop is happening because of something happening overseas, far from any showroom. At number 6, we have the 2026 Hyundai Kona, impacted by global supply chain rebalancing that most car shoppers never see or even think about when browsing listings online. Currency fluctuations between the Korean won and the US dollar created a pricing advantage that Hyundai is passing along faster than usual to maintain competitive positioning across North America, the UK, and Australia simultaneously, all in the same fiscal window. That's a technical way of saying exchange rates are quietly working in your favor right now if you're looking at a Kona, whether you realize it or not, and whether your local dealer explains it or not. What most buyers don't realize is that this window is fragile and genuinely unpredictable, tied to macroeconomic factors well outside anyone's control at the dealership level. Currency-driven discounts can vanish the moment exchange rates shift back the other way, sometimes within a single fiscal quarter, without any warning to consumers browsing listings online or comparing prices between trims. Dealers know this too, which is why they're pushing Kona inventory hard while the advantage still exists, offering incentives on trims that weren't discounted at all, even 6 months ago, including higher trims with the larger turbocharged engine option that historically held firm on price. This isn't marketing spin, it's economics playing out in real time on showroom floors, from Los Angeles to Sydney to Manchester, all at the same time, for the exact same underlying financial reason tied back to a single exchange rate fluctuation most buyers will never trace. But it doesn't end here, because number 5 introduces a manufacturer secretly preparing to discontinue an entire trim line, and that changes everything about how you should be timing your next purchase. This SUV might not exist in this exact form next year at all. At number 5, we've got the 2026 Ford Escape, quietly being phased toward a redesign, meaning current generation models are being cleared out aggressively across Ford's entire dealer network, coast to coast, in both the US and Canada. What most people don't realize is that outgoing generations almost always get steeper discounts than incoming ones, because Ford needs physical floor space immediately, and marketing budgets are shifting hard toward promoting the new design before it even officially launches to the public in auto show reveals and ad campaigns. This is one of the biggest, most overlooked opportunities in the entire SUV market right now, and almost nobody outside the industry is talking about it openly. Buyers chasing the newest version are missing out on a nearly identical Escape at a significantly reduced price, often with better long-term reliability data, since this platform has already been road-tested for several years across millions of accumulated miles from real owners. The bugs, if there ever were any, have already been worked out through years of real-world ownership, over-the-air updates, and recalls, if any existed at all, for this particular generation. Dealers won't tell you this outright because outgoing models are harder to market as exciting compared to whatever's coming next in glossy press releases and auto show reveals designed to generate buzz. But mechanically and financially, the current generation Escape is often the smarter buy for anyone not obsessed with having the absolute newest badge parked in their driveway for the neighbors to see. Now here's where the list gets intense, because number 4 through 1 involve discounts that dealers are actively trying to keep as quiet as humanly possible. This is the point where things get genuinely uncomfortable for dealerships. At number 4, the 2026 Jeep Compass, built by a manufacturer facing real internal restructuring, is being discounted specifically to boost quarterly sales numbers before upcoming earnings reports land in front of investors and analysts. What most people don't realize is that corporate financial pressure directly impacts consumer pricing, far more than most buyers ever assume it does when they're simply comparing sticker prices online without any context. When Stellantis needs to show strong unit sales to investors and analysts watching every quarter closely, discounts appear almost overnight, often without any public announcement or advertised sale event tied to a holiday weekend or model year clearance. This is exactly why some of the best deals right now aren't advertised on manufacturer websites at all, and won't show up in a simple online search no matter how long you scroll through listings. They're negotiated quietly, dealer to dealer, buyer to buyer, often only revealed when someone actually walks onto the lot and asks the right specific questions about incentives and holdbacks that dealers never list publicly on any window sticker or online listing. And that's precisely the mechanism driving what's coming next, because the number 3 pick isn't just another discount story buried in spreadsheets and quarterly reports. It's a complete shock to everyone who thought they understood this particular brand's pricing structure and market position after decades of remarkable consistency. Get ready, because this next reveal is genuinely the biggest one on the entire list, and it's been building the entire video toward this exact moment. Nobody expected this brand to fall under $20,000 ever, under any circumstances. This is it, the number 3 spot, the 2026 Volvo XC40. A brand historically associated with premium positioning, strong resale value, and pricing that almost never dipped this low, even on base trims during the worst sales slumps in recent memory, has quietly slipped under the $20,000 threshold in select markets across the US and Canada. And here's where it gets crazy. This isn't a fluke or an isolated dealership pricing error that'll get corrected next week once someone at corporate notices. Multiple Volvo dealerships across completely different regions, the US, Canada, and parts of the UK, are independently confirming remarkably similar pricing patterns on base XC40 trims, suggesting this is coordinated at a much higher level than a single rogue dealer. What most people don't realize is the reason behind this. Aggressive overproduction combined with slower than expected demand created a backlog that nobody in the industry publicly admitted to until inventory numbers became genuinely impossible to ignore internally, forcing immediate action from leadership. Instead of waiting patiently for demand to catch up naturally over another sales cycle, which could take another full year, Volvo chose to move volume immediately, even at the real cost of short-term brand positioning that took decades of careful marketing and premium pricing to build. This completely changes everything about how the XC40 is perceived in the budget SUV conversation going forward, possibly for years to come. For years, this nameplate was considered untouchable below $25,000, a badge you paid a premium for regardless of trim level or included features, simply for the emblem on the hood. Now it's sitting comfortably under $20,000 in some listings, shocking longtime brand loyalists and bargain hunters alike who never thought they'd see a Volvo badge at this price point in their lifetime, let alone in 2026. If this surprised you, wait until you see what's happening at number 2, because the reason behind that discount is even stranger and honestly a little embarrassing for the brand involved. This one's dropping because of a marketing gamble that backfired badly. At number 2, the 2026 Mitsubishi Eclipse Cross. Mitsubishi attempted an aggressive rebrand targeting younger, urban buyers with a bold new marketing campaign built around social media influencers and a completely refreshed visual identity meant to modernize the brand's image, and it simply didn't land the way they hoped it would. What most people don't realize is that failed marketing campaigns often result in immediate, sometimes drastic pricing corrections to recover lost momentum before the damage spreads to the rest of the lineup and drags down other, unrelated models in the same showroom. Rather than let the Eclipse Cross sit unsold on lots while public perception slowly recalibrated on its own over many months, which nobody in leadership wanted to risk, Mitsubishi slashed pricing aggressively to reignite interest fast and stop the bleeding before the next sales quarter closed out entirely. This tactic is actually fairly common across the industry but rarely discussed publicly because admitting a marketing miss looks bad for brand image and investor confidence alike, especially for a manufacturer already fighting hard for market share in North America against larger competitors. Instead, discounts get framed publicly as seasonal promotions or loyalty pricing, even when the real underlying reason is a failed campaign trying to reposition the vehicle for a demographic that simply didn't respond the way internal projections suggested it would months earlier. The result is a genuinely capable SUV priced far below where it logically should be, purely because of a branding misstep rather than any actual mechanical, safety, or reliability issue with the vehicle itself. But now we've arrived at number 1, and this final entry combines every single factor we've covered into one unbelievable compounding price drop unlike anything else on this list. This is the SUV tying every previous clue together into one story. At number 1, we have the 2026 Kia Seltos, impacted simultaneously by overproduction, currency shifts, generational buyer disinterest, and an upcoming redesign, all stacking at exactly the same time, in the same fiscal quarter, compounding each other's effect on price. What most people don't realize is that when multiple pricing pressures hit the same vehicle simultaneously, discounts compound rather than simply add up in a straightforward, predictable way that's easy to calculate from the outside. That's exactly why the Seltos has fallen further under $20,000 than almost anything else on this entire list, in some markets dropping close to $17,500 out the door before any real negotiation even starts at the table. Kia dealers are treating this as a must-move situation internally, not a nice-to-have promotional event tied to a holiday weekend or a slow sales month that'll pass on its own. That urgency benefits buyers directly, especially those willing to negotiate assertively rather than simply accepting sticker price as final, because dealer flexibility right now is unusually high across the entire Seltos lineup, including higher trims that rarely see any discount at all in a normal sales year. This is the clearest example on the entire list of how multiple invisible market forces can align at once to create an opportunity most buyers will never even notice until it's already gone completely, replaced by next year's pricing structure and a fresh set of dealer targets. Final segment, so here's where everything comes together. 9 SUVs, 9 completely different reasons for dropping under $20,000 in 2026. The Nissan Kicks, the Volkswagen Tiguan, the Chevrolet Equinox, the Hyundai Kona, the Ford Escape, the Jeep Compass, the Volvo XC40, the Mitsubishi Eclipse Cross, and the Kia Seltos. Every one a 2026 model except the outgoing 2025 Tiguan, still clearing lots across 3 continents. Overproduction, currency shifts, failed marketing, generational disinterest, corporate restructuring, and looming redesigns all played a distinct, traceable part in pushing these prices down faster than anyone in the industry predicted at the start of the year and faster than most dealers are willing to admit publicly. None of these discounts happened by accident, and none of them will last indefinitely once inventory clears, exchange rates shift back, or a new fiscal quarter resets dealer targets and incentive structures. The Volvo XC40 at #3 remains the most shocking entry on this entire list, simply because it broke a pricing pattern that held steady for over a decade, proving that even untouchable premium brands aren't immune to market pressure when overproduction meets softening demand at the exact same time, in the exact same fiscal year. If you're SUV shopping in 2026, timing matters more than brand loyalty ever will, and understanding the reason behind a discount tells you exactly how long that window will realistically stay open before it closes again. The smartest buyers aren't chasing the newest release with the flashiest press release and the biggest ad budget. They're chasing the exact moment right before these specific discounts disappear again for good, whether that's the Kicks, the Kona, the XC40, or the Seltos sitting on a lot near you right now, waiting for the right buyer. That window is open right now, and based on everything we've covered across every single one of these 9 models, it won't stay open long. If this opened your eyes, hit subscribe, because next week we're exposing which SUVs are about to spike in price before summer hits. You'll want to see that one before you sign anything.